In this video, I'm going to present 3 reasons why every Canadian should be investing in the stock market. The first reason why you should be investing in the stock market is to fight inflation. Every year, the price of goods and services increases, which lowers the value of your money. The sustained increase in the price of goods and services is called inflation. For example, from 1960 to 2021, the average annual inflation rate in Canada was just under 4%. Overall, the total price increase in this period was 823%. In other words, this means that an item that cost $100 in 1960 cost $923 at the beginning of 2022. If you follow the news, listen to the radio, or pay attention to the price of the products that you buy on an everyday basis, you will notice that the price of goods does indeed go up every single year. Some years the prices go up a little bit more than other years, but the general trend is that the overall price of goods and services does go up every single year. Over the past couple of years, Canadians are facing very severe price increases. For example, as of April 2022, the year-over-year inflation in Canada was just under 7%, which is the highest inflation rate in over 30 years. The 3 most discussed aspects of inflation are obviously energy prices, food, and housing prices, but the price of just about every single essential and non-essential item that we consume on a daily basis, the price of those items goes up over time. It's the case in just about every single country on earth. The fact is that money loses purchasing power over time. So the first reason why you should be investing in the stock market is to at least generate a return every year that is equal to the inflation rate to maintain your purchasing power. If your savings and your investments are not generating returns that are at least on par with the inflation rate, you are losing purchasing power and you are getting poorer every single year. The second reason why every Canadian should invest in the stock market is to generate long-term wealth. Alongside real estate, the stock market is arguably the single best way that the average retail investor can generate wealth over several decades. Canada is a nation of homeowners with more than 2/3 of Canadians owning a home. However, over the long term, the stock market generates greater returns than real estate investing. A study published in 2021 by the Royal Bank of Canada revealed that over the long terms, equities generate better long-term returns compared to real estate. Their data reveals that between 1996 and 2020, the Toronto Stock Exchange generated an 8% average annual return compared to a 5.7% average annual return generated by the nation's average real estate market. The disclaimer to these numbers is that tremendous wealth can be generated by real estate investing. However, it is rather difficult for the average retail investor to diversify in real estate unless they have substantial capital to invest. In contrast, it is much easier to diversify your stock holdings by investing in products such as index funds. However, rather than pitting real estate and stock market investing against one another, every investor should be investing in both of these asset classes to generate long-term returns and generate wealth. The third reason why every Canadian should be investing in the stock market is to optimize their taxes. The Canadian government encourages people to invest in the stock market by providing them with various tax optimization schemes. For example, there are 3 main ways that Canadians can optimize their taxes through stock market investing. The first way you can optimize your taxes is by investing in registered retirement savings plans, otherwise known as RRSPs. There are 2 main benefits to investing in RRSPs. The first is that the contributions you make to an RSP are tax deductible, which reduces your taxable income for the year you are making the contribution. The money you contribute to an RSP can then be invested in virtually any financial asset, such as stocks, bonds, mutual funds, or index funds. Not only do you get a tax deduction, but the second main feature of an RSP, the money that is invested in the financial assets within the RSP, can grow completely tax deferred, which means it is sheltered from taxation until you start making withdrawals from your RSP. So this means that you can save on your taxes and generate wealth at the same time. The second way that Canadians can optimize their taxation through stock market investing is by opening and contributing to a tax-free savings account known as TFSAs. Contrary to an RSP, the contributions you make to a TFSA are not tax deductible. However, the funds that are invested in a TFSA can also be invested in any financial asset, much like an RSP, but the main difference here is that the money grows completely tax-free, which means you will not pay any taxes when you make withdrawals. If you invest $100 and it becomes $1,000, you can withdraw the entire $1,000 and not have to declare it on your annual income. It is completely tax-free money that you have earned. This is a very powerful tool for Canadians to invest in the stock market and generate wealth. And the third way that you can optimize your taxes by investing in the stock market is by purchasing certain life insurance policies that have an investment component included in them. This allows you to generate tax-free growth inside the policy, and these policies also have a death benefit included in them. These are more complex investments that are reserved for individuals who are looking to build an inheritance to leave to their successors or who are preparing estate planning strategies. Generally, these policies can be used to offset tax bills upon your death. So those are 3 reasons why every Canadian should be investing in the stock market. In my next video, I will present the easiest way for every Canadian to start investing in the stock market.